Hello everyone and welcome back to Finance with JCL. This show is aimed at new and intermediate level investors, and today we're going to discuss selling stocks, when to sell and when not to sell. Now the reason I'm doing this video is because selling a stock is very important. It's the actual action of locking in and achieving the profits that hit your account. And there's very much less consideration and coverage of a sale decision in comparison, for example, to when to buy a stock. So I thought I'd start out my intermediate level series with this show. So the objectives are, first of all, to share my sort of virtual checklist of when to sell. And secondly, for you to be able to consider these reasons in your investing activity. So before we go on with the actual detailed information, make two assumptions. So the first key assumption is that the stock has been purchased at a discount to its actual value. So in other words, with a margin of safety. The margin of safety is a very important investing concept because it allows you room for error and an upside when you buy a stock. And the second assumption is that the approach is very much a long-term investing approach. So you're not speculating or trading. You've got stocks in your portfolio and you are there with a sort of long-term buy and hold approach. So those assumptions reviewed, let's look at when I believe you should sell stocks. So first of all, and perhaps most importantly, if the company fundamentals have changed in comparison to your analysis when you purchased the stock. And there could be several examples of that, but one of the excellent ones is the amount of debt that the company has substantially increased. So if you do that, it doesn't mean automatically sell it, but it should be a trigger to say, right, the company's suddenly got a lot more debt. I need to go and reevaluate the stock to decide whether it breaches my criteria and therefore I will sell it. The second kind of linked one to that is the loss of what's called a moat. So a moat is a kind of competitive advantage. So an example of that could be, Facebook has a kind of a network advantage, so lots of people on it, and perhaps other social networks spring up in the future that have a similar number of people on it. So Facebook would no longer have that network advantage. Kind of you're on it, everyone you know is on it, so therefore why would you use something else? There are lots of different types of moats. Another one perhaps could be a cost of production moat, so a company is able to produce a product similar to its competitors, but it can produce it at a much lower cost than the others and therefore enjoy higher margins or sell at a lower price. If that is lost, then that's a reason to review a stock. And finally, if the company has a very kind of special kind of switching advantage perhaps. So if you look at Apple, once you're in the Apple ecosystem and you've got various chargers and phone and Mac, etc., they all kind of talk with each other quite well, but it's harder to switch out of them, so you're more likely to buy their product next time. So these are all examples of moats, and there are others, but if the moat the company has, which is a really good reason to buy a company, has been lost, it should be reviewed, and then if it no longer has a competitive advantage, it's a good reason to sell a stock. Now the third reason is that bad management may take over. Now bad management is a relatively subjective kind of analysis, but if you believe management has changed and poor quality management, you could do well to sell the stock before the price starts dropping in the future. A further reason to sell could be perhaps a moral disagreement with the path the company's taking. So you may feel that some of the actions a company's taken, whether perhaps to do with environmental reasons or others, is negative in your personal eyes, then you may decide to sell the stock. So it's not a financial issue, it's very much something to do with your personal ethos about how you want to invest. And that's a very subjective thing and is personal to you. So if you don't like a company for that reason, you may wish to sell it, even if the financial fundamentals of the company are strong. I've got four further reasons, and the fifth reason here is that there could be a significant negative change to industry prospects. And the best example of that, perhaps with the current virus situation, is the airline industry. The airline industry has had to take out a lot more debt, and also the chance of growth compared to their previous positions is substantially reduced compared to what it was. So actually, the industry prospects have changed negatively. The growth prospects for the industry have almost gone, in my opinion. So therefore, you may consider that you would want to sell stocks in airlines on the basis that that industry is now, as a whole, in very challenging circumstances. Now, the sixth reason why you may wish to sell a stock could be that actually you've got to a point where there's no further upside, or perhaps it's trading way above its actual intrinsic value. Now, this is quite a subjective point because it's based on your personal analysis, not anyone else's. But if you think the company's maxed out, it's got no further to grow, you may consider selling, but only if you've got something better to put it into. So you might think, right, I've maxed out, but rather than just selling it and taking cash, and cash doesn't really grow at the moment with a low interest rate, so you probably keep it in there until you found something better to put it into. Now, the other point is about finding something better to put it into, is that that's quite a good thing in itself. So you may find a company, you may have 10 stocks, let's say, and you may find a company that you believe is better than 8 or 9 of the stocks you've got. So if it's going to be a second or third best company, you're probably going to want to buy it. And perhaps you don't have any cash in your account because you're fully invested. You may actually say, right, I'm going to rank my companies 1 to 10, and perhaps the 10th best company, or indeed the worst out of your companies, you would actually sell that one in order to fund what you believe is a substantially superior organisation. And finally, last but not least, and this is perhaps one that people don't really consider, but is actually very important, is if you believe you've made a mistake, you should sell the stock. So perhaps you've done some analysis, our numbers come out at X, and actually you look over your numbers later on and you find that you made a mistake in the analysis. Then that's not to say something out and turned differently, a mistake in perhaps you input the wrong figures, perhaps you overlooked some news that had very significant negative impact on the company. But if you get in that position, you're best to, and it materially impacts your calculations from before. So if it gets to the point where actually you wouldn't have bought the stock if you knew that information, you should sell it because you're holding a stock that's substandard, and that's not a good place to be. So for me, those are the key 8 reasons that I consider when I'm looking to sell my stakes in various companies. And I thought it'd be quite good perhaps to look at the other side of the coin, which is when not to sell your shares in companies. So the first of those is if the market drops. So just because the market drops, so perhaps, for example, in March, it dropped significantly in that time this year, that does not mean you should therefore sell because everyone's panicking, the market's dropping. Now you may consider, right, why is the market dropping, and do those reasons impact the future profitability and cash flow generation of my company? That's an indirect point, but just because the market drops, that should not directly lead to you selling your company. And perhaps linked to that is actually if the company's share price itself drops. Some company share prices could drop 10%, even 20% in a week. For example, they may miss target earnings, there might be some negative news, and these things may not actually impact materially their ability to generate cash, but the price would drop. And that's not a reason to sell it, and quite the opposite. If you still believe in the company and the numbers stack up, it's probably a reason to buy more if it drops because there's more upside. And the third reason when not to sell your stocks is you've actually sat there, you're overthinking it, and perhaps you're predicting a market drop or a company drop in the future. So you're trying to time the market. No one can consistently time the market, the top or the bottom, on any consistent basis. And quite often you think you found the top and it goes even higher, so you can miss out on further gains. So do not try and predict what's going to happen in the market or the company's price. Focus more on what's going to happen on the fundamentals. And if the fundamentals of the company stack up and they meet your criteria, then you shouldn't really be selling it, in my opinion. Now, there's a couple here which are a little bit linked. So let's say you both had stock in Tesla, for example, and your friend sold theirs, and they're persuading you that it's not a reason to sell. Always fall back on your logic and your fundamental analysis of the company. And if the criteria are still true, then generally speaking, it wouldn't be a good reason to sell. Now, the last one I've got here is your favourite fund manager did it. So let's say Warren Buffett owned the stock and he sold it. So you may think, right, that's a bit of a problem because he probably knows more than me. And if he sold it, I may wish I want to do it. Now, there's two things there. One is he may not know better than you, although on average he probably would. Actually, you might know something he doesn't. And everyone has different areas of expertise and companies they've been exposed to. But more importantly, you shouldn't automatically sell because he did, but it's probably a good trigger to say, hang on a minute, Warren Buffett sold this stock. Now, I'm not going to automatically sell, but I'm now going to dig into more detail to try and work out why he might have sold it. And there may be some news you've missed, or you may have just found something better to invest in. So it's really important to research it and don't make an automatic decision. So, in summary, knowing when to sell is, in my view, a more difficult skill than buying, and a less talked about and considered skill. So please consider these aspects when you're making your decisions. Do take that professional advice, but also make sure you're doing the right thing for yourself. I tend to focus more on kind of logical reasons and actually don't really pay too much attention to the price of the stock. The price just happens to be what someone wants to buy and sell it for that day. The price does not directly link or impact the value of the business and how good it is underneath its intrinsic value. So the price could be anything. Kind of think of it this way: if you bought a house for 500,000, and then perhaps next day someone knocks on your door, the estate agent goes, do you know what? I'll give you 600,000 for it. Would you sell? If he comes next day, all the ones on the street that say were sold for 400,000, he said, right, I'll offer you 410,000. Would you sell? You wouldn't. You'd say, right, how much? I like my house. It still does what it needs to do. I think it's worth X. So the guy on the door can keep knocking on my door and I can just smile and nod and tell him to go away. That's the way to think of it. And perhaps most importantly, this is a really difficult one actually. It's okay to take a loss. Well, in all those scenarios we talked about earlier, and you sell a stock, you may well be down. So do not have the emotional position going, oh no, I'm down, I'm going to wait. I'm going to wait to try and recover the losses before I sell. If it doesn't meet your criteria and the company is now substandard in your eyes, sell it and take the loss is what I would do. And the reason for that is you can then put your money to work in something that's better and growing and generating more cash for you. So it is okay to take that loss as long as you've got something better to put it in the ideal world. So all that remains to be said is happy selling, as it were. And in closing today's show, I would like to thank you for listening. And if you could please click the like button, that would really help the show on YouTube. And also, if you are following one of the various platforms, if you could also subscribe, you'd be alerted to our next show. So thank you very much for watching, and I will see you next time.